How is everybody? It's of course Monday morning. This is your first trading session of the week if you are trading London. So I wish you all the best trading session. Remember to stick to your risk. Always follow your plan. Don't jump the gun too much. Take it easy. Let price deliver to you. So many people are probably thinking this morning, what is going on with price? Well, currently, if you haven't kept up to date with what's going on in the overall economic side of the world, there is fears of a recession, which is causing, of course, some of your big assets like Bitcoin and some of the major investment side of things. So some of the indices and, well, not some of them, most of the indices. And of course, the more stock-based side of the so the investment side of the market is dropping off severely. So don't let it throw you off and sort of put you into a fear state. That's what happens when the market starts selling. Everyone goes into that fear selling mode. You might make a little bit of money selling, but it's really not worth it. You're better off waiting for that market to align. Remember, every uptrend has a down, every downtrend has an up. So just wait for it to blow over, essentially. Whether that means you waiting a day, a week, a month, it's all dependent. Of course, you can trade whatever way you want to trade, but from my own experience, you're better off just waiting for the market to realign. So in this week's analysis, we are looking at euro and gold, as we always do. So first of all, we are only 5 followers away now from our 500 follower goal on TradingView. So if you want to stay up to date with the TradingView charts that we post on a weekly basis, and you can see we have relatively extensive history of chart work, multiple pages, and they all have the same principle in mind, which is giving you an idea price could do something, but allowing price action to actually display to you what is going to happen. So when we play this, for example, it done what we thought, which was run the lows. It did end up coming back, but it sold away almost exactly from the area that we wanted it to sell away from. So again, it's not about being 100% correct and accurate. What it's about is having a blueprint, an idea, a principle that you can look at, for example, the week of the 30th, and say, okay, what's the primary move here that we're expecting? Well, we're expecting the highs to be ran, and then we're looking for another major sell-off around this area. So let's play this. Hopefully it wants to load. And in this case, we had the big push, which is great. We didn't get the sell-off. That's fine. Remember, we're only entering based off of if price action delivers to us what we want it to see, like what we want to see, within the move. Now, this week, we have our Euro chart, which of course is displaying the absurdly large move that happened on Friday. Note that this move was again a fundamental movement due to the news on the dollar, as you can see. Now, with this chart, what we're looking at this week is we're looking at the liquidity that was formed across here. You know what, let me get my Epic pen so I can just make things a little bit clearer for you guys. Okay, awesome. There it is. Right, so we have the liquidity above these highs. Let me find this here. Brilliant. Yep. So we have the liquidity above these highs is what we're looking at. This is being taken. Excuse me. So because this is being taken, we have two options. The liquidity stored here is either being used to push the market back down into this run here, which we have highlighted, or we're going to shift up above the area of supply, which is what we tapped into at the end of last week, and we're going to push higher. Now, if we do push higher, we of course don't really have any 4-hour relative structure to be able to reference off of. This is why when you see these arrows that just go off into nowhere like this, why isn't there more to expand on than that? Well, you don't want to be trying to gauge what price is going to do on a given day based off of something that happened 3 or 4 months ago over here. Now, of course, you can reference off of the daily chart and off of the weekly chart and all things like that. But unless we break out of this range, we could end up playing within the structure we have highlighted, which means marking the weekly and daily chart every single week may not be beneficial. Now, it doesn't mean we don't, it just means we don't refer to it within our TradingView weekly outlook. So based off of the same principle, we've taken the liquidity here. So we're looking for price to either pull back and deliver bullish. We're looking for price to hit the 50, deliver bullish, or deliver bullish through the high, or sell off from this point. Now again, you may be looking at this and thinking, why is there so many goddamn options? Well, there are multiple things the market can do and deliver within a given time. So we always like to have an idea. Now, the main principle here for us was run down into here and then pull back and then possibly sell again. Or from this point we buy or we just continue buying. The rest of this stuff like buying from here isn't really ideal. It's mainly sticking to the structure that we have already. So the bias overall was for us to run these highs. But if price action is delivering a fundamental movement, generally you don't see a pullback and then a run high. It's generally just a push straight through those highs. So this scenario here becomes the question mark within the markup. Of course, to get down to here, we have to hit multiple different points to be able to even get to this level, so we can sort of interpret what price may be looking to do. Whereas running this supply leaves us with this huge open range, and it pretty much gives us a blank chart for the week, which is fine, but we don't really like trading within the fundamental structural movements. Now, it doesn't mean that we won't, it doesn't mean that we can't. It's just better to have non-fundamental moving price action. It gives you much cleaner and much more probable setups. So let's go to the chart right now and we'll show you that is actually gold. So we'll come on to that in a second. And you can see straight off the bat we have had a run of that high. Now we've closed out once here, so we're already beginning that question mark move. Now the reason why I say it's a question mark move is because the reference we are using is the direct structure we can see on the chart right now. If we zoom out and begin to look at structure on a higher time frame with more of a long-term narrative, it becomes clearer as to what price action is most likely looking to do. So when we come out and we go to the daily, for example, you can easily see here, what is this price action doing? Well, it's running this high. It's come down within this bullish range, taken the liquidity. So we've taken this high as well. And I would say this high is going to be the next point that we're taking. From here, we have a gap with liquidity above. So if we begin to break down within there, it could be a potential to run the lows within here. But unless we start breaking structure and changing narrative, we'd expect that direction to continue. Now, coming back down to the 4 hour, what are we expecting from this? Well, if we fail to close above this wiki high right here, and we sort of play around within here, I would look for a re-entry into this range and the scenarios that we spoke about to potentially play out. Now, of course, don't hold your breath for this, and we are going to re-update the Discord community and the VIP members as to what we are looking at now with this. But of course, this is to discuss the price action that we've given out on Sunday. So if you do want to be a part of the detailed version of this idea and the live stream surrounding it inside the Discord, then the link is down below. Now, let's get rid of that. Let's go back over to here. Now from this, I pretty much would be expecting this to run that high and continue creating those moves higher. If we don't deliver that and price action decides that it wants to stay below this point, as I stated, I will be looking for a move back into this range, and I'll be looking at some of the smaller areas within the initial push from market to deliver that next shift to the upside. So let's go across to gold and take a look at the markup we gave out on gold. So gold actually is pretty similar in the sense that we created this liquidity across a 4 hour. This liquidity is either going to cause price to shift lower from the area of supply that it left open right here and the area of supply it tapped into on the left. And then we're going to run back down. Now I actually miscolored this area of demand. It should be green, but it's red, so we'll deal with that. And then we'd expect and look at this area of demand to, excuse me, to either push price back into that narrative. So we're running liquidity across the base here, and then run back into those highs, or we'd expect this to fail. Now you may look at this and think, oh, this is a trend line break and retest, but it's actually a breakdown of structure. And then the pullback idea would be an area of demand or supply, in this case, that caused that breakdown to occur. So we're not referencing off of it tapping into an invisible area that is a trend line. That's just the reference point for where the institutional direction is moving. We also have the liquid high right here. So if this area fails and we run that high, we'll be looking at euro and it'll be going into the question mark zone. Now the reason for that, this would actually be an all-time high. If we take out this, would be going into an all-time high, which means again it's a complete question mark. We don't know where the all-time high will sort of end up sitting again. We know it's going to make an all-time high again. It's inevitable, but where that all-time high leads us and where it's going to actually be tradable within there becomes a question mark, because if you're going to buy at an all-time high, then you'd be pretty stupid. And also if you're going to sell an all-time high, you'd also be pretty stupid, right? So we need to make sure we keep this question mark area at the forefront of the idea. But the main principle is within the structure we have right here. Again, don't worry about the tag. There's no support resistance in here. There is trend line. But the liquidity across the lows is stored directly above this area of demand, which again should be green. So we're looking for a active movement towards this. Now with the news coming out of the US, we are looking at gold potentially taking up some of the slack behind the movements that we're getting across the stock markets and some of the crypto stuff. But at the same time, generally investors have the same attitude across the board, so you're going to probably see a small sell-off again. Now, because gold is such a progressively moving asset, it generally doesn't sell off as heavily as a lot of some of those stock movements, because it holds a lot of value for a lot of people. I know the stocks do as well, but you will generally see gold holding its strength. So I believe we're going to get into this area and go bullish. Now, we still have to sort of break out of this trending move that we are in right here. And if we do take this high, then like I say, that's all-time high, and we go into a question mark of what level that's going to run to. So the areas to watch on this is the area of supply right here, the breakdown of the structural lows within here, the pullback to recorrelate within that, and then a push down into this. And for this to either push higher or fail, if we come down, we've got this and this area of demand below. So there is a potential here for a short-term sell-off into a longer-term buy, or a sell-off through the lows leading us into an actual bearish market, which would be quite interesting if that's the direction it wants to go in. Now, we'll follow and track what price is showing us, of course, and the reason why we give you the options, as we've said, is because this is a blueprint of a potential series of outcomes. We're not predicting price action here. We're simply giving you options for this is a probable scenario within the plethora of scenarios that price could actually deliver. So let's go back over to look at euro. If you weren't in the live stream earlier on and when we were talking about this, it's actually beginning to sort of play into that scenario that we were looking at already. So let's go over to gold. Now gold is, again, this, we're not looking at this as like support resistance or trend line. We're not looking to buy off of this trend line. This is an institutional trajectory. So they are generally buying up at a relatively steep and aggressive pace. Now look at the way that you've got this tap back into this area that we spoke about, a sell off aggressively, and then it's almost just been bouncing in this lower area since. Well, it's because you have the big bulk of people trying to sell with the fear side of the market because of the interest rate and the overall recession fear. And then you have, of course, the big investors that are holding this price action above its current trajectory, which is this level around here. Structurally, we have broken down, which makes sense tapping into here and selling through. That's why that was an option. But until we actually deliver lower into an area that we can begin to evaluate and actually sell from or buy from, we're not really going to be doing too much with this. Now, again, this price action is relatively indecisive. We did tap into this area of supply and we have broken down, but the breakdown was relatively weak. We failed to take out any strong lows. We haven't actually provided any direct momentum from here. So I wouldn't be surprised if you see price delivering back up higher and running for this, going for the all-time high again. But, looks like it's ATM, but we are in this area, which tells us price does have potential to sell through. So we're just going to hold our ground here on gold, and we're going to wait for this to expand one way or another. This for me is the main area to watch. This has already been tapped in, so we can actually pretty much eliminate that now out of the situation. And we can begin to establish momentum around the lower time frame and begin to actually look at what price action may want to be doing. Now, of course, notice how I'm talking about actually being able to be involved with this, even though we're standing our ground currently, but it's because we're pulling back within the structure and the narrative that we have already planned around. Now, why didn't I have the same attitude and approach towards Euro? Well, Euro itself has already exceeded the points where we are looking for long positions from there. Now, that's meaning we can look at this all day long and eye up longs, but we are at the high of a move. We've just taken a high. We're at the upper portion of a range. It's not ideal environment for buyers to be stepping in. And of course, with a big move like this, it's not ideal for you to be stepping in as a seller either. Gold still has a relative sort of narrative around this. So there is potential for this to play off of the trend line here if we begin to show momentum on a lower time frame and push up to this liquid target. And then we also have the option where price may want to break through and there could be potential for sales within here. Honestly, I believe we're going to see some real choppy price action today. This week is not that filled with news, so there is the potential for a low moving week. That's fine. If it wants to move slow, then we'll just move slow with it, right? You guys know what we are doing. We're following the price action, we're following our trade setups, we're following our risk, and of course we're following what price action is actually delivering. We're not predicting something to happen. That's why we're not giving you this is going to go, all the way to the high. We're not giving you these over exaggerated ideas. We're not trying to predict reversals. We're not trying to do anything that isn't already presented to us in a pretty nicely packaged price action, which you can actually see in quite a lot of instances. So guys, I have of course been your host as always. I have shown you the charts that we're looking at. We went a little bit more detailed this week. We have extended this to around 20 minutes. I think 20 minutes is probably pushing it in terms of length for an actual short-term video. So we're not going to massively drag on anymore. But I appreciate every single one of you that has joined me here on the YouTube live stream. We really do appreciate it. If you have enjoyed even some of the minor points, make sure you hit us with a little like, and a comment, of course, goes a long way. All the links that you may ever want to know or look at or click on are in the description down below. So without further ado, I appreciate you all. I'm going to go and make myself a coffee. Then we're going to be jumping in the Discord live stream, and we're going to be going through all of the potential setups that are showing themselves this morning across a larger spread of assets. So guys, thank you very much for joining me on this weekly markup. Have an amazing week. Stick to your risk, and I will catch you all in the next one. Keep an eye out on the